As you know, it's the usual practice to meet after the half-yearly results and at the end of the financial year. So this is the mid-year meeting. We had the board meeting today, and I think the results are already before you. So it has been in many ways the best quarter we've had ever, in the sense that the volumes at over 4.18 lakhs. It's a volume which reflects a production. If I annualize that, it'll come to a production of a little bit under 1.7 million cars, and which is way beyond what would be the normal 100% capacity utilization. So, as I think I had mentioned some time ago, our people keep looking for ways of getting extra production out of the same machines, even though they're not rated to produce at that level. And that is what has enabled the production in this quarter and sales in this quarter to be 4.18 lakhs. The half-yearly results show that the growth of sales domestically has been over 12%. And in this quarter, domestic sales are over 18%. So I think we can say that we are well on our track to meet the commitment which we had made of double-digit growth during the year. I think we can feel much more confident today of doing that double-digit growth because the market conditions are better, production levels are available, and so I think that looks pretty good in that terms. The profit went up by about 60%. It's a very high increase in profit. But when you get to capacity utilizations of the level which we have now, which, as I said, is well above the 100% mark, then every extra car adds a lot to the profit, because the depreciation and other overheads have already been earlier taken care of by the lower production. So there's anything above the actual marginal cost of production is all profit. So that has been a major factor. Because of the higher volumes, and we have not increased administrative and other costs, the ratios of these extras in terms of administrative costs, marketing costs, and such things have come down compared to the past, and that also then adds to the profit ratios. The foreign exchange has had a slightly negative effect, but other than that, I think depreciation has come down for the same reason that we've had more production out of the same machinery, so the depreciation amount is fixed. The more you produce, the lower is the depreciation per car, so we have saved there also. So overall, I think if you look at the numbers in detail, you'll see that the increase in profit is largely because of the much higher level of capacity utilization, higher sales, and of course the usual activities in the company for cost reduction. They have continued. There's no let-up on that side. I think the employees and all the managers and everybody is always at that. That continues, whether the market is good, not good, whatever happens, that cost reduction part is always happening. So overall, I would say a fairly satisfactory quarter for Maruti. And we are now looking forward to the rest of the year with more optimism and open to questions. Avkasan, would you like to add something?
Yeah, it's good. Okay.
Yes, please.
Ayukawa-san, given the kind of profits that you have shown in this quarter and the previous quarters as well, do you think is that sustainable going forward, especially even after the contract manufacturing agreement comes into play in February? You'll obviously be getting more cars, but you'll be paying the cost price. So how do you see the net profit turning out for the next couple of years or maybe even
In
more?
case of any kind of new factory that started, those kind of development cost will be charging the depreciation, etc. That will becomes a negative impact for the product. Even though we producing ourselves to new plant, same condition, that could be not different that contract manufacturing that our own plant. I believe so, but maybe that we get some negative impact after starting at our operation in Gujarat.
So when you say negative impact, in what sense?
Negative mean that because margin-wise it will be at because the cost becomes higher automatically. The depreciation at the newly started factory, and also there are some costs additionally will be happen that transfer the component, etc. We have to solve that gradually. We try to reduce that, but at the beginning stage maybe we have to absorb some cost increasing.
Sorry, I mean, correct.
So what he's saying is that because in a new plant, when you start producing cars in a new plant, the overheads in terms of depreciation, administrative cost, etc. per car will be higher than what it is in a plant like Gurgaon or Manesar. Therefore, the margins will come down. But I don't believe that even with all those costs, our selling price will be lower than the cost. It's not that the cars will sell at a loss. So the total profit in absolute terms should not come down. But the margin, if it is today, you have an EBITDA margin of what is it, 13.7? 17% EBITDA margin. That 17 may not be retained.
So just to understand it, this 2,000 odd crore net profit, is that sustainable quarter on quarter going forward?
I would think so. I would think.
Just to, one fact is that, we have had expansions in Manesar earlier, 3 plants. So whenever you have an expansion, you will have a usual fixed cost for some time till you attain full capacity. Similar thing is going to happen in Gujarat also. So one is, of course, the fixed cost is going to go up in the beginning, and then when you attain full capacity, it will kind of moderate.
Yeah, but even Manesar plants, when they started, didn't lead to a fall in absolute profits.
Second thing that you're talking of the absolute profits and whether it's maintainable, I think there are factors that are under our control, like cost reduction, which we'll continue to do. But then there are, factors like forex and commodities, which you'll have to keep a watch on, because these can tend to get very worse at times, and then it's difficult to kind of negate that with cost reduction. So these are variables that you'll have to keep a watch on. So it's very difficult to predict whether margins will increase, go down. It will depend on some of the
margins should come down because of Gujarat. Should come down. Margin should come down, but not this 2,300 crores of profit.
Right.
Just one more question. Bhargav, sir, a couple of years ago when this proposal was mooted that instead of Maruti, Suzuki would invest, is it fair to say that investors have already started to reaping benefits out of that decision that was made then?
No, the decision that Gujarat will be a Suzuki investment, of course, is something which has been ratified. I think the benefit of that is available in terms of other income, if you look at. Other income is much higher than what it would have been if we had put in the money in Gujarat.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.